What's up, Crypto Crush trading community? Today we are going to go over one of my favorite strategies, DCA, dollar cost averaging. Dollar cost averaging means that you understand that this right now is a good entry to whichever asset we're looking at, and it's a good entry. However, there are going to be multiple entries. So let's talk about, for example, Bitcoin. Bitcoin stands on around $70,000 per Bitcoin. Today is 10th of February 2026. We are expecting another downtrend. In our community, just for context, we believe that Bitcoin will reach the 150, 200,000 and even more eventually. Will it take a year, 2 years, 3 years, 5 years, 10 years? We don't know, but we do believe that will happen. So what do? We take multiple entry points. At the same time, we want to make sure that the entry points are smart and they're right. So can we start buying now if we believe that at 70,000? Yes, of course. But we rather wait. And smart traders and investors always position themselves properly. They don't chase the market. They move the liquidity and they understand how market liquidity moves and they stay positioned. They give it some time, and if it hits their investment, wonderful. If it doesn't, they don't start chasing the market. They wait, they take a zoom out, they look for a different asset, and then move their liquidity with it. The same goes for dollar cost averaging. This is more of a holding type of strategy, not a trading type of strategy. This strategy is more for the long term, for those who are watching this and like to buy stocks in the right time, or buy Bitcoin in the right time, or Ethereum, or other coins. But this is not similar to day trading. So let's talk about Bitcoin. Let's say right now, we believe that it will go to 60 or 50 or 40,000 even, right? Just for example. So I don't know how long it'll take. I don't know when it will happen, but I do know that every other week or every other day, I get approximately extra $100 after spending and after bills. I have an extra 100, an extra 1,000, an extra 10,000, an extra $10. It could be your McDonald's meal that you didn't get this week. It could be your fancy restaurant. It could be whatever that you did not go to this week and was left in your pocket. And you can use that simply to dollar cost average. That way, in your mind, there's no risk at all, right? Because it was money that was supposed to be spent somewhere. So every time you get an income or whatever, and again, this is not a financial advice, this is simply how I see things and how I like doing dollar cost averaging on assets in the right time. So we create cash flows, right? That's part of our online business vision, to create all these cash flows so that we always have that cash flow to dollar cost average properly. So let's say Bitcoin in a week from now will drop down to 50,000. Will I buy? Yes, of course. Again, this is not a financial advice. This is strictly what I would do. Will I put all my money into it? I don't know. I wish I would want, and I wish I could know the exact same point. But this is why dollar cost averaging is such a great strategy, because you don't need to worry about that. You simply need to worry about the amount that you're going to start buying from. So if we're looking at Bitcoin, if we're going down to 50, I'm buying more with the spare extra income or cash that I have. If it's going to drop a little bit further more and just happen to pass another 2 weeks and I have another extra $1,000 on the side, I'll throw it into Bitcoin again. And if it will drop a little bit more, and this is exactly what I did last cycle, all the way down to 19,000. I did the same exact thing with the Coinbase stock. And this is just for context. This is just for example. I'm not saying that doing it on Bitcoin right now is the right thing to do. I'm not saying that buying Coinbase stock is the right thing to do. I'm just saying what I did and worked for me. And it's a strategy that I very much like and I very much use because it works over and over again. But it's important to understand, but it is important to know when is the right entry point. So for example, last time with Bitcoin, I did it starting from about 50,000 all the way down to 1916. I kept on buying every week. And when it reached $124,000 a few months ago, I was extremely happy because all of those entry points came out to be profitable. So that's the idea, ladies and gentlemen, to ongoingly buy Doesn't matter if it's at a low point, at a high point, if you set yourself a buy zone, that from there you're starting to dollar cost average, that is what you're going to do. And that is exactly what we're planning to do in our community. So for more information on what we're dollar cost averaging, make sure to reach out to us and make sure to join our daily calls so that you have a better insight to what we are doing right now. That is it, ladies and gentlemen. See you on our next tutorial.